Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Monday, last day of July 31st, 2017, and this is the Daily Report for Gold and Silver. Never a dull moment in the White House with geopolitical hotspots in both Venezuela as well as North Korea setting things in motion, as well as the firing of Anthony Scaramucci from his position as communications director after a tenure of about, I believe, 10 days. Net result has been that we have seen a dramatically lower dollar. Unfortunately, at the same time of this lower dollar, we have had selling in the precious metals markets. However, it did result in a unchanged market as far as gold is concerned, closing at $1275.30, and higher pricing in silver, up 12 cents at $16.81. Dollar index under tremendous pressure, closing down about 46 points at 92.65. So traders, as I said in my opening statement, my opening letter today, there's really never a dull moment at this current administration's White House, with geopolitical hotspots really flaring up in two strong areas of the world, North Korea as well as Venezuela, and some real chaos in the current administration's White House staff with the firing today of the communications director. As such, we have seen gold prices move up nominally, but more importantly than that, we have seen the dollar continue to get devastated. We are looking at a chart which contains the US dollar index on the bottom and gold prices on the top, both being represented in daily candlesticks. We can see really that since the beginning of this year, and it kind of capped during December last year, up at around 104, we have seen, although you've had some peaks and valleys, pretty much a steady decline of US dollar value, which has now lost over 10% in value, considering a percent per point, and the fact that the US dollar index was trading up just shy of 104 and now is well below 93. Today alone, we have seen it decline about 0.4%, and the net result has been the dollar on this recent leg of this rally, which really began at the beginning of this month. To give you a clear indication of what we're looking at in terms of dollar strength and weakness and how that affects the market, I've gone ahead and brought in the Kitco Gold Index. And when we look at that, we can see that this was a screen print from 10 o'clock, 10:12, I believe. And what we're seeing is that it's fixed at 1269.40. Market is currently at 1269.70. It is actively trading. But what is interesting is that it is all dollar weakness that is accounting for any kind of an upside move or positive green tick today, because we had the dollar index really adding $6.60 in value, but actual trading in the market taking it down by about $6.30. So any kind of a positive change that we're seeing is after overcoming the normal trading, taking gold prices lower by just under the amount that we are seeing in terms of weakness in the dollar, giving us gold strength right in here. And that, to me, I find is quite interesting for a Monday morning. And traders, the other thing that I find a little perplexing in terms of today's trade, we are looking at what is being labeled as most active futures contract. That's where you get this from hash sign F. And so it is still relating to August gold, which of course is coming very, very close to expiration at this point. And that is currently being bid at roughly $1275.70. But it is also showing a net change of up about 40 cents on the day. And I'm trying to put that all into perspective, because if I recall, we had a closing price on Friday of roughly $12.70, and that would be represented by the high of last week. We had some activity yesterday, so we are fixing it right now at $12.76. However, if we go out and pull up a chart on the October contract of gold, We'll change that right now. What we're seeing is that is being fixed at 72.30, and that is the current active month that we are trading at. As I said, we will look to move our stops up higher either later on today or tomorrow morning. I am looking at the various opens of last week as a point in which we want to move our stop to, but we will send out a special trade notification and trade alert. And traders, as far as silver goes, and we do have a current silver trade in which we are long silver from roughly, call it $16. We have silver up about 12 cents today, and that is trading at 16.81, 16.82. And so our next real level of resistance that we want to see how the market reacts to this price point, if of course it continues to move higher, has got to be the 50% retracement that sits at around 16.89. And of course you have the psychological level of $17, which comes in right behind that. But if you take a look, and I put basic horizontal line across, you can see that we don't really have a lot of tops or bottoms. However, if we look at the price point, the 50% retracement, we can see some historical data in which the market had this price point as either support, as you can see here, or resistance, as you can see here. Therefore, my recommendation is to maintain your current long position in gold, maintain your current long position in silver. As far as stops, keep them where they are, but we will be moving them up very, very shortly and early this week. In other markets that we look at, as I said, the dollar is lower and we have a mixed bag in U.S. equities today, with the NASDAQ taking the blunt down about 26 points, and that closed at 63.48. The Dow up 60 points at 21,891, and in essence an unchanged Standard & Poor's 500 at 2470. And traders, in terms of other markets that we do follow, mixed bag in U.S. equities, with the Dow Jones Industrial Average closing up about 60 points, and the S&P closing slightly lower on the day, but the NASDAQ and tech stocks getting hit pretty hard, with the composite index closing off about 23 points. Of course, the big news in alternative or other markets that we look at has to be the dollar index. We're looking at a weekly chart. We can absolutely see that 2 weeks ago, last week, we broke through what I believed was a pretty critical area, and that was based upon the lows that were achieved back in September and October of 2016, before the dollar went on its last dramatic climb as we went towards the presidential election, and immediately concluding that, and the subsequent fall of the dollar that has occurred throughout the year. Breaking through this particular price point, my next real level, as I've talked about on multiple occasions, has to be about 92. And traders, we're already at 92.73, so we are very, very close to this price point. A move below this on a technical basis is a really hard market to call, in that, as you can see, prior to the market really consolidating and finding some sort of support in this area, the market was in a dramatic climb. And this climb, if you recall, occurs as the market trades from about 80 on the dollar index back in 2014, climbs historically to 100, and then kind of trades sideways with these lows at about 92 and these highs at 100 until we got the break that we just spoke about. So there is absolutely no doubt, on a technical basis, any kind of a break below 92 signals, at least on a technical basis, the potential for a free-falling dollar going to much lower pricing. We talked about the fact last week that as this market rose, with precious metals rising, we would go ahead and raise our stops up. I am planning to do that either later on today or within the next 48 hours. We, in essence, as I said, in gold had an unchanged day. We've got nice profits in both our gold position as well as our silver position. And of course, if the market continues to move higher, we want to take advantage of it. However, at some point it will come down. And when it does, we want our stop to protect as much equity as possible. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.